Hello everyone. I think we are just about ready to start. I'm just making sure that everything's working before I start at 2:30 my time on the dot. So assuming you can hear me, if someone can just type in the chat that they can hear me, that'd be great. And I know that's working. That'd be good. Excellent. So someone said the video is fine, so I'm going to believe them. So how are we doing? It's 2:30 now. So let me just go through the risk warning before we start. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 75% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, that's that done. I think occasionally there's the comment on these that the volume isn't loud enough. I'm just going to paste a message in the chat for those, and I think you just need to make sure the slider thing on the YouTube screen is set to max as well as your own volume. Okay, so hopefully someone's saying they can't see something. Try refreshing. I think if you want to refresh your browser, hopefully that works. So just to explain, we do these. We've started doing these once a week on a Friday, and it's a look back at the week. We spend a lot of time on the platform, so we'll spend a lot of time on this, looking at the major markets, stock indices, currencies, gold, silver, oil. We'll have a look at crypto as well, and then anything else that you want to look at, if you can put it in the chat. And when we've gone through our normal markets, we'll go back and look at those as well. Okay, so that's how it works. So we'll just do a quick whiz through some stuff. Today we always have a special offer on these live streams. So if you're a client of ours and you're trading the S&P today, so the broader US stock market index, you can trade it with no spread. So basically there's no bid offer spread. It's one price, so it's a slight saving off normal trading. And of course, if you open an account, you can open an account within a few minutes. You can get up and trading. But that's our special offer of the day. Okay, zero spread on the S&P 500, and we do different markets. Important events for next week. I just picked out a few major ones next week to watch that could move markets. Tuesday, the 26th of January, UK unemployment. Wednesday, the 27th of January in the evening, the US Federal Reserve rate decision. Normally get a bit of volatility off the back of that. Thursday, the 28th of January, Eurozone CPI, that's inflation, and US GDP. How's the US economy doing? All of that sort of stuff. So I think there's a lot coming out next week, but I thought I'd pick just those four as some major events where we could see some market volatility. So let's talk about the markets from now on, or from the week so far. We saw when President Joe Biden got inaugurated this week, US markets set new all-time highs. So we'll take a look at those. All still positive, I think. We've seen a bit of a sell-off the last day. It's starting a bit weaker today, but broadly positive. DAX, the German market, is near all-time highs. Nikkei, we didn't look at this, but someone did mention it last week. So just to prove that I do pay attention, we'll have a look at the Nikkei, the Japanese market, because 30-year highs on that one at the moment. Gold and silver, we saw some recovery in both of these earlier this week, but that has faded the last couple of days. We'll take a look at these two. They're always popular markets, gold and silver. Bitcoin, of course, we have this FCA ruling now where if you're a UK broker, you can't offer derivatives on Bitcoin. If you're based in Europe, though, if you're a European client, I think you're still allowed to trade them. I can't trade them as a UK person, but we'll have a look at Bitcoin anyway. Lots of volatility over the past week. Is the top in? That was the subject from last week, and I think that has proved to be the case so far. So we'll have a look at Bitcoin. Crude oil also under some pressure when I last looked a few hours ago. We'll take a look at that. But I still think it's a buying opportunity if we see any weakness. But we'll take a look at crude oil. And it really continues to defy a cautious outlook for 2021. Foreign exchange, the pound is really interesting at the moment. I think there's definitely some trading opportunities in the pound at the moment because it keeps pushing out to its best levels in almost 3 years and then falling back again. So we'll take a look at that. Euro dollar it's been a good week this week for euro dollar. We'll take a look at that one as well, and that's it. So we'll jump into the platform and take a look at things in more detail. I should say, of course, if you're watching this and you don't subscribe to our YouTube channel, if you could just click on subscribe because we do 3 or 4 videos every week on various markets throughout the week. I think what we did gold, silver, and commodities this week. The commodity video went up yesterday, didn't it? So if you're not subscribed, click on subscribe. Obviously, it's all free, and it helps Capital.com, who pay me to do all of this sort of stuff. So if we can get some business and get some subscribers, we can continue pushing out lots of new content. Right, let's start with stock markets first of all. So let's take a look at the S&P. I'll just change this to a 10-day RSI. I'm more a fan of price action rather than oscillators and stuff. But I thought let's have a look at the S&P. So this is where we are now. This is a daily candlestick chart on the S&P. There's Friday, there's Thursday, there's Joe Biden's inauguration. Let's just flip that over to an hourly chart. We saw good gains on Wednesday. So it was here, wasn't it? So the market opened about here and then pushed up all day long. Pretty much the S&P sold off since then. But for me, I'd still be a buyer on dips for these stock markets, even though we could argue that the markets are overvalued. I think I did a video about a week and a half ago just asking whether stock markets are in a bubble. And I think regardless of whether you think they're in a bubble or not, I think the trend is clearly up. So for me, I'd still be inclined to be a buyer of stocks. Looking at the S&P, I picked up on the sharper trend from November last year. Clearly that's still going. So we are, 2.5 months into this now. That trend is still up. I would still be a buyer of dips when it comes to stock markets. I think it's on the S&P. I think it's only if we start to lose, perhaps the sort of 21st December lows around 3,600, does it look like we could get a much deeper sell-off. But stock market's still bullish, and these markets only yesterday made fresh all-time highs for the S&P. So let's see what happens. Looking at the RSI down here, we do have a bit of bearish divergence going on where the market's pushed higher. The RSI makes a high, market pushes higher still. RSI makes a lower high. So again, perhaps it will come under a bit of pressure today, but I would still personally be looking for buying opportunities. Let's flip it over to a shorter term chart. Here we go. So this is the sell-off we've had since, what's the date today? The 22nd. So since yesterday, under pressure yesterday, under a bit of pressure, it's just opened officially now. It's opened strongly, as you can see. Still above the lows from Wednesday. So, just because it's sold off for a day and a half, for me, doesn't mean there's a top in. So I'd still be happy to be a buyer of these stock indices. So that's that one. Let's take a look at the DAX. Let's look at the Nikkei first, actually. The Japanese market. What do we call it? Is it the Nikkei 225? Do we give it its proper name? There we go, Nikkei. I do have a trade. I do. For those of you who are new to this, we do lots of trades on the videos that we do throughout the week that are done with real money. It's just Capital's money and not my money. And also, I trade a fair bit for myself as well. I've had a trade on the Nikkei since December. We've had this great breakout on the Nikkei last year, in November last year, breaks through the 2019 highs at 24,200. It was quite interesting that all the way through 2020, it would always get a little bit nervous pushing back up towards these highs. And then finally in November, we had the break. And here we are. The market's pushed higher. Hasn't made much progress over the last week. But again, I think like as with the S&P, at the moment, I think these are still strong markets. And I'd still be happy to be a buyer on dips for stocks. When it comes to the DAX, I did do a trade on the DAX this morning, actually. And I'm just wondering how it's working out at the moment. I think it is bouncing a little bit. I thought it was interesting. The DAX clearly is the German stock market. Really weak this morning. Sold off. That was the high from yesterday, early yesterday morning, 8 o'clock in the morning. The market sells off. Oh, sorry, that's today. What am I talking? Today's yesterday. Sells off, pushes through the lows from the last few days, but it didn't really collapse much more. So I ended up buying at 13,800 this morning, just wondering if this was something of a false break. I think it can be quite interesting when a market pushes through an obvious level, and that was fairly obvious support, I think, from earlier this week, and then doesn't really follow through afterwards. So for me, I was a buyer at 13.8 with a stop the other side of the lows. So far, at least, it's worked out. We'll see how it goes. But again, stock markets, I think they are still strong and difficult to argue against not buying into dips at the moment, at least in these markets. Let's take a look at gold and silver. We did 2 videos this week on gold and silver. I think I do have a couple of trades from those videos. So again, for those of you not familiar, we do the videos during the week, and I always try and put a trade on in the video. So there's the silver video went up on the 19th of January. So that was 3 days ago. So bought at 25.07. The market's currently 25.30. So slightly ahead on that. We'll look at that in a bit more detail. Gold that was Monday's video, I think. Gold bought at 1834.6, and the market's 1843 at the moment. But let's take a look. Let's take a look at these markets. So let's look at gold. I think gold's a really interesting market at the moment, given what's going on. And you can see, look at the size of the move down today. It's quite a big reversal today. It's given up all of Wednesday's gains in gold. But just to walk ourselves back on gold, in the summer, the price of gold hit all-time highs at $2,075 an ounce. And since then, it's just been correcting, is what I would say it's been doing. Just sliding lower highs, lower lows, blah, blah, blah. The whole thing goes on. And then, the beginning of this year, we had a break. And it looked like finally that weakness had run out of steam. And the buyers had come back in, and we were going to see something of a recovery. It didn't last long, the break. The market got knocked back. But the reason I bought it this week, on Monday of this week, which would have been about here, on the 18th, was just because it held well above that old low. So for me, I am still bullish on gold as long as it holds above 1760. So it's at 1843 now. For me, I'm still bullish, and my target in the short to medium term short term probably, is for a run back up to 1960, the 6th of January high. So for me, I'd still be a buyer on weakness in gold. I'd only change my mind if it breaks below 1760. So I think it's really interesting. Now, I haven't talked about silver yet. We're going to do that in a second. But clearly quite weak again today. Let's take a look on the hourly chart. It's taken quite the hit. That was the move again on the inauguration day earlier this week. Bit sideways, and then it's really fallen off this morning from about 1860 down to 1840. But again, maybe we're seeing it start to stabilise. It's quite interesting here that gold over the last couple of hours, we are seeing some stability coming in. And this whole support from 1830 was important earlier in the week. So I think it could be an interesting afternoon for the price of gold to see if it stages sort of recovery from here. Let's see what happens. But silver, let's take a look at silver. It's quite a frustrating market, silver, at the moment, but I think like gold, it's really interesting. It's been an interesting start to the year and plenty of volatility. You know, if you look at the year so far for silver, it's traded near $28 on the 6th of January, and then it's down at 24 on the 17th of January. So lots of volatility for the price of silver. And I wonder, again, it's been hit quite hard overnight. But for me, let's just take that one off for now. You know, we had these 7-year highs in the summer for silver. For my money, we've just been correcting since then. It is trying to stage a recovery from here. I'd still be a buyer. You know, we've got that long position from earlier in the week. So for me, levels to watch if we're trading silver next week. You know, the levels I'd be watching. And actually, it's interesting. It's hit it again today. So in the last hour or so, it's traded down to $25. And you can see, again, just how important $25 was on the 19th and the 20th of January. So maybe we'll see a bit of a push higher for these metals this afternoon. It should be an interesting afternoon, I think. We'll see what happens. But for me, I'd still be inclined to be a buyer on dips for silver. You know, I have to say, silver and gold do not look like the most exciting markets in the world at the moment. You know, it did look like they were trying to stage a recovery, finally break out of all this sideways trading we've been in since September. Been knocked back since then, so perhaps we just have this range trading for these markets. I don't think they're the most interesting markets at the moment, but that's what we have. That's what they're doing. So there we go. So that's gold and silver. I'll be a buyer on dips. Nothing too exciting though, I don't think, at the moment. Let's take a look at some of the currencies. Let's take a look at. Let's start with pound against the dollar. I've got a few trades again from other videos we've done. There's some really older trades in here. There's one from September, buying at 128.48. One from the 7th of December at 132.88, and one from the 22nd of December at 134.37. So they're all 200, 400, 800 points in profit, those trades. And the reason I bought, you know, if you watch the videos we do, we talk a lot about trend following in the videos. Clearly, you know, for me, this is the trend in the pound going back to May of this year. We've had a good uptrend in the pound. You know, we do get sell-offs obviously along the way, pound against the dollar, but it's still strong. What's interesting, look at it over the last, I don't know, what is it, the last few weeks or so. It keeps trying to break 137 pound against the dollar. So January the 4th, it trades to 137.04. January the 14th, 137.10. Yesterday, 137.45. So it keeps trying to launch its way through 137, and it can never actually quite hang on to it. So I suppose there are definitely two options here. If you thought, well, actually, the pound continues to run out of steam at 137, it's a great area to go short. Because, you know, if you're going to go short now, if you think, well, it's going to go back to 133, you can go short at one where it's trading now, 136.50, with a stop maybe 100 points or so. So you've got 100 points risk and maybe 300 points profit. It's not the trade I would do, but there's definitely an argument for going short up here, because so far at least, it just cannot get through 137. But for me, I'm still expecting it to move higher. You know, the prices we saw yesterday were the highest it's been since April 2018. So personally, I am still a buyer on dips for the pounds, and my intermediate target is for a run back to 140. But I think it's just quite choppy actually trying to get there. Let's bring up the short-term chart. But so there's an argument. Actually, let's do a trade. We normally try and do a trade on these things, don't we? I was going to say there's an argument for being a buyer now. So why? So we'll do a little trade on the pound now. So if I'm a buyer now, for me, the closest I'd want my stop, I would put it under What's that? Wednesday afternoon's low. Let's pick up on Wednesday afternoon's low. And for me, this is where people go wrong when they place stop losses. They end up placing them in just random places. But you can see how important that level was on Wednesday afternoon. The market traded down to 136.20-ish and ended up springboarding its way up to 137.50. So for me, let's place that trade. We'll buy it now. So I'm really looking for this level to hold this afternoon, and a push up, probably not this afternoon, but a push up maybe early next week. Let's put the trade on. So we normally risk £100 on these live stream trades. So let's go 135.90. So I'm going to put it 30 points the other side of that level. And I'm going to buy, how many am I buying? If I buy 24,000, let's knock it back a bit. Let's just buy 22. Oh, hang on. My brain isn't working. So if I buy 22,000, where it's trading now, with the stop at 135.90, my risk is £104. So that's it. Let's do the trade. Just buy that. There we go. So we've done our one trade for this afternoon. So that should be in with our pound against the dollar trades now in there. 22nd of January. There we go. We bought 136.54 on that. So that trade is in. We did do two trades last week. If you remember, if you were watching last week's live stream, last week we bought Facebook. There we go. 15th of Jan at 20 to 4. And we're up 111 quid on that trade, which is somewhat fortunate. We also bought Euro Sterling last week, and we're up £15 on that trade. That was actually losing until today, that Euro Sterling trade. I was checking it throughout the week. So it's maybe it won't be third time lucky here. Maybe this one will end up being a loser, the one we've just done. But we'll see. But I think it's interesting down here for a short-term trade that we're pushing back, and we have so far at least held above the lows from whenever it was, the 20th of January. There we go. Okay, that is a home haircut. Well spotted. But for me, the short-term trade is a bit of fun on this trading account. But the daily charts still really positive. Right, euro dollar. Euro dollar has been an interesting market. We had in the euro against the dollar, we had this run up from November into this year, and it's fallen out. You've seen the pound pushing to a 33-month high against the dollar. The euro has been going the other way until this week. But I do wonder if this is the market to watch next week. I'm still bullish, on the euro against the dollar, because if we go back to March, that trend is clearly still up. We've fallen out of this sharper trend here, but I do wonder if over the next few weeks we see the euro have a push to 124, 123.50, 124. So I think euro dollar is an interesting market to watch going into next week. We've got that European inflation data next week. There's the Federal Reserve thing next week, announcement on interest rates. Perhaps the euro over the last few days has broken out of this slide it's been in. So I think it's really interesting, euro dollar going into next week. I think that would be an interesting trade to see if we can see it gain ground from here. So been under some pressure, but a week of recovery for euro against dollar. Oh, we did the S&P. It was the first market we did. Someone's asked about the S&P. I'd still be a buyer on dips for the S&P. Okay, so we've done euro dollar, pound against the dollar. We've done gold and silver. Let's have a look at crude oil. Crude oil. It's not moved. It's interesting, crude oil. It's not moved much over the last week. I would still be a buyer on dips on crude oil, but let's just take a step back and look at it. This is where we are with the oil price. So it's traded as high as almost $54 this year, West Texas crude. So it's basically back to levels not seen since February 2020. And back then, the high in Feb was about $54, $65, $55. So again, with crude oil, I think it's an interesting one that you could take this two ways. I think crude oil. I think there is, for me, I'd still be a buyer because the trend is up. But if you wanted to go short crude, if you thought, well, it's crazy that crude oil is above $50 a barrel, given the state of the economy this year, there are definitely arguments for going short crude. We've it struggled over the last week making any ground. It feels like quite a nervous market looking at the RSI down here, 10-day RSI, we've got almost, not quite, but almost bearish divergence. So again, suggesting that perhaps the strength, is running out of steam. For me, the trend from November is still up. It's still holding above the trend line. But it has gone a long way. It's gone from $34 in November to $54 this month. That's a massive move. So perhaps it is a bit overcooked up here. Let's bring up the shorter term chart. Here we go. What's interesting, it has, even as we're doing this now, in the current hour we're in, you can see it's bounced off that old support. So this sort of $51.50 is proving to be pretty good support for crude oil at the moment. We've seen quite a strong move. You can see that it's moved about 60-70 cents during the last hour. So it's interesting down here. I think if someone put a gun to my head, I would be a buyer now of crude. I'd probably rather sit on my hands and wait and see what happens. But I'd be a buyer now with the most aggressive place for a stop, the other side of the lows at 51.60, or to give it a bit more room, perhaps the other side of these lows here, 7th of Jan lows. So I think the first video we're doing next week on the channel will be looking at oil. So we'll have a look at that in a bit more detail next week. But for me, that trend is still up. I do think it is somewhat crazy. It's risen $20 in 2.5 months. Crude oil. So what? It's about a 60% move in crude, 50%, something like that. It's a big move for a mainstream, massive commodity. But we are where we are, So an interesting one, I think, going into next week, crude oil. I think if we lose that most recent support, it could see a lot of people looking to get out, a lot of buyers maybe looking to get out. It could encourage short sellers who have no doubt been burnt on the way up. So I think it's an interesting market up at these levels. And the final one we'll look at, then I'll look at some of the questions in the chat, and we'll look at different markets, is Bitcoin. So Bitcoin is, I put a tweet out last night just saying, if you were feeling brave, big support for Bitcoin at 30,000. If you thought you were going to if you'd missed the boat, you can see it's such. I think I've said it before. I really don't like the cryptocurrencies. I think they are, they're crazy markets. Bitcoin has gone. Clearly, you'd have made an absolute stack of money on the way up in December, and if you did, good luck to you. Well done. But it's a market that's gone from 42,000 on the 8th of January, which was 2 weeks ago, to 29,000 yesterday. So it's moved. It's that 30% in a couple of weeks. It's massively volatile. And I just think it's one of these markets that if you're the right side of the move, it's great, but it's also one that sucks in, I think, lots of novice traders. But anyway, we are where we are on Bitcoin. So for me, if I had to do a trade on Bitcoin, I'd be a buyer, I think, up here. It's fallen out of that trend, that sharp trend that was in place off the mid-December lows around 17,000, 18,000. It's fallen out of that trend. It's had a look below 30,000 overnight. But again, perhaps it's a false break. Perhaps the break through 30 is a false one. So for me, if I was a buyer now, and that would be the trade I would do if I was allowed to, I'd be a buyer of Bitcoin. The closest I'd have my stop, let's flip this over to an hourly chart. The closest I'd have my stop would be below today's low, which was set between 1 and 2 in the morning. So the other side of 28,750, or actually, to give it a bit more room, the other side of these lows from sort of New Year's Eve and this spike low, 4th of Jan, the other side of 27.8, that sort of area. So so for me, I'd be expecting Bitcoin to have maybe a run higher next week. But if it goes below, I think if it goes below 30 again and goes below these lows from today, we could see quite a lot of selling as people thinking, oh, I've held it since 42,000. I didn't take my profits. I need to get out. So we could see quite a bit of a panic if these levels break. But for now, I'd be tempted to still be a buyer. There we go. Let's see. So lots to watch next week. I think, stock market's still strong. Clearly for me, currency's interesting because pound is pushing sort of near 3-year highs and keeps failing. Euro has finally recovered this week. Gold and silver, a little bit boring. I think gold and silver, quite choppy. Lots of volatility, but no real trends. But I'd still be inclined to be a buyer of gold and silver on weakness. And crude oil, that trend is still up. But and I'd still be a buyer. But I think if we trade below today's low, about 51.40, we could see quite a bit of pressure. So I think it's going to be an interesting week next week again for markets. I'll deal with some of the questions now. We'll look at some of the different markets. I'm just going to scroll back through the comments. Gold and silver, yeah, we looked at those. Gold, yep. Lots of popularity, gold and silver. Pound, we looked at that. Euro, we looked at that. Cryptos, we looked at that. We looked at Bitcoin anyway. Euro, dollar. Sterling yen, let's take a look. That's an interesting one. We don't look at that one very often. Let's have a look at sterling yen. So if we take the US dollar out of the equation, so sterling against the Japanese yen, it's interesting this. So sterling dollar is pushing towards a 3 year high. Sorry, clearly because we've seen a lot of dollar weakness. Sterling yen, so the pound against the yen, is still below September highs. That's a really interesting market. Sterling yen. I don't know what I would do. I don't have an opinion for a change here. You know, we did run up on sterling yen to 142.75 ish at the end of August. Sells off and been recovering again. Let's pick up on that trend. You know, our trend looks something like that. So I'd still, again, I think I'd still be a buyer. I'd rather have a sell-off to buy into in sterling yen. But obviously there's also an argument to go short, isn't there? Because we're up at these levels where it ran out of steam last time round. It's the perfect place to go short. If you wanted to go short sterling yen, you can go short with a 150 point stop loss or something. Stops above here somewhere. And you've got a lot of downside if it starts to sell off. It's a really interesting market. I think sterling against lots of different markets at the moment. So that's sterling yen. Amazon. Let's take a look at Amazon, see what they're doing. I think we looked at them last week and they were just a little bit boring, weren't they? A little bit stuck. And I'd say it's pretty much the same. I suppose, again, you know, if you look, we saw clearly a massive, great run off the March lows when they were $1,630 a share, up to $3,500 a share in September, sideways since then, and just a bit boring. I suppose the aggressive trade, if you flipped it over to a short-term chart, would be to go short Amazon up here. So over the last 3 months, the Amazon share price has really struggled in this 33.20 to 3400 area. So I think that could be one tactic to go short up here. From a daily chart, it's a bit of a do nothing because it's just all a bit sideways at the moment. The dollar index, someone's asked for. Let's take a look at the US dollar index. Sorry, I'm just clicking on the wrong thing here. So the dollar index. I think this is a really interesting market at the moment, full stop, because it affects so many things. You know, it affects obviously the price of gold, the price of silver, sterling, the euro, all of this. We never get that much interest for it when we do a YouTube video on it, so we stopped doing them. But I think it's a really interesting market because March of this year, when the coronavirus broke, the pandemic really started breaking, the dollar did incredibly well because people were looking for a safe haven. The dollar index, which is the dollar against a basket of other currencies, trades up to 104, and it's been in decline ever since. And I do think, what's going to be the story for this year? You know, are we going to see a dollar comeback for this year? And I think, for me anyway, the jury is still out. You know, our trend looks a bit like that. So that trend is still down off those highs, off those March highs, and it has lost about 10% over the last 9 months. But looking at what's going on here, it feels like it's trying to build a recovery. Whenever we've had rallies on this latest leg down from November, they've not lasted long, and bang, the dollar's got smashed again, and bang, it got smashed. And just now, I just wonder, is it trying to build a recovery? So I think it's a really important market to keep an eye on for the next few weeks, the dollar index, to see if it can stage a recovery from here. If you're bullish on the dollar, there's an argument to be a buyer now. You know, we're at 19.20 now. The lows from the 13th of Jan around about 89.90. You know, it's quite interesting. It's come back down, and we've seen buying come back in again. So I think it is interesting up here. But I'm still not quite sure which way the next major move on the dollar index is going to be. So an interesting one to keep an eye on. Right, let's see. Oh, natural gas. I think we're doing a natural gas video next week. Let me have a bring up the charts on natural gas. This is really interesting. We looked at this last week, didn't we? And I said I thought I'd missed the trade, but I think for me anyway, clearly it's not financial advice. It might be lining up next week. Natural gas is a bit of a crazy market, natural gas. If we go back longer term, it was back in when is this 2018, really famous short squeeze that did a lot of damage to people who were short options, but it went from like 2.5 to 5 in the blink of an eye. Since then, the natural gas price has just been moving lower. But last year, we did have this great move from June, around 1.6 up to 3.4. So the price doubled in the space of about 4 months. And since then, it's been correcting, and it's sort of come back to this old zone of support. And I was saying I should have bought it back here around about 233, and it went up to 280, and I thought I'd missed it. And I just wonder, is the setup for me next week? It's still really weak at the moment, but let's just take some of these lines off, make it a bit clearer for natural gas. If it squeezes a bit lower and we go back towards 230, which is also quite good support in early August, do we see some strength come back in? So I think it's a really interesting one. It looks really weak still today, but perhaps next week we'll get a bit of a turnaround in natural gas. So we'll see. We'll see where it goes next on the gas price. Let's scroll down. Alibaba. I don't know if you can trade. Can you trade Alibaba with us? I'm not sure. Yeah, you must. It's US stock, isn't it? There we go. Let's bring that one up. Let's go up on the dailies. So Alibaba, the Chinese Amazon is how it's always referred to, isn't it? It's quite interesting, this, isn't it? Is this not when famously the founder, Jack Ma, went missing, didn't he, in about November? And there was sort of question marks about what happened to him. And I think he's emerged again, hasn't he, in recent days. But anyway, looking at it since March, if we pick up on the trend since March, a good run from $170 to $320, so nearly doubled into October. Sold off since then. For me, I would be tempted to be a buyer, but I would just sit on my hands. We've seen quite a sharp move over the last week from $230 to $270. So I think if I was interested in Alibaba, I'd be watching it next week and watching to see where this weakness ends. So do we get it? Does it pull back to about 240? Then a bit of stability, then I'd be tempted to be a buyer with a stop, probably the other side of this big sell-off on Christmas Eve. So for me, that would be a bit of a sit on my hands stock at the moment and see what happens next week. But I'd be looking to be a buyer, assuming it's going to stabilise if it sells off a bit further from here. NASDAQ, let's have a look at the NASDAQ, because that did hit all-time highs again. It's not been as weak as the S&P. What's the S&P doing at the moment? No, not much. It's not been as weak as the S&P, but let's flip this over to a daily chart. So there's the NASDAQ. Look at this. This is a brilliant argument if ever we needed it for trading with the trend. It's a great trend off those March lows in the NASDAQ. Overbought just in the last week or so on the RSI, but of course in a strong trending market, if you're looking at an RSI, it will go overbought quite regularly. Only yesterday the NASDAQ hit a fresh all-time high. So let's say you wanted to go short the NASDAQ and yesterday it made a fresh all-time high. What are the chances that you sell it? That's the absolute top. It's highly unlikely, isn't it? So for me, I'd still want to be a buyer on weakness for the NASDAQ, and it's just zoomed up again, hasn't it? It's sold off a bit into the open, came back pretty close to sort of yesterday's lows. Let's make this a 5-minute chart. I'm a big fan. A slight diversion, but I'm a big fan. If you want to be a day trader and jump in and out plenty of times during the day, I'm a big fan at looking at the previous day's high and low. So look at yesterday's lows on the NASDAQ. So when it opened at 2:30 UK time, there's a lot of sort of choppiness from about 13,300 through to 13,320. Then it finally gets a move on, and we see the market move a lot higher. Look at today. Again today in the pre-market around 13,320. ended up being the low. So if we're looking for low risk entry points on short-term trades, take a look at the previous day's highs and lows. So again, if I was trading the Nasdaq this afternoon, it's currently at 13,392. If it sells off back towards these lows, I'd be looking for a buying opportunity. So for me, where does the Nasdaq go from here? I'd have to say higher, because that trend is so strong. That trend just continues. I think someone mentioned Facebook, so let's have a quick look at Facebook. We did that trade on it last week, didn't we? Buying at 252 on Facebook. So let's take a quick look at there. So clearly they've bounced since last week. Where is it? Facebook. So we bought, it was here, wasn't it? And it was just, again, very simply, just buying off the support. That level for Facebook, $244, $43, whatever it was, had been big support back in September, third week of September. Last week, should have been here, I think, the 15th, last Friday, was when we were down at this level. It's a bit of a fluke how it's turned out. It's a bit of a fortunate bit of timing, that one, but it's just gone up every day this week, Facebook. So it's quite interesting, I think, how that one has turned out. So again, maybe we'll see it squeeze a bit higher, but clearly 280 has been a bit of a problem for Facebook. So we'll see. Amazon, we did Amazon. Soybeans, I don't think we cover soybeans. I did that the commodities thing yesterday, and we don't cover soybeans, but I do have a trade running on soybeans as well. They've been under pressure this week, so for me, I can't bring the chart up on soybeans. Let me just see if I jump onto a third-party platform. We do cover the other commodities, but we don't have soybeans for some reason. Not yet, anyway. Let me see if I can bring it up, because it is an interesting market. Soybean futures, and it's had a heck of a run. Oh, I haven't got the permission set up for it because I need futures. Damn. Okay, trust me, it's had a great run. Soybean. If we look at something like all these commodities. Have been moving, like sugar, for example. A lot of these agricultural commodities. Actually, the soybean chart does not look that dissimilar to sugar at the moment, because I've got a trade in sugar as well, where it's selling off after hitting multi-year highs. And I think it's going to be an interesting week for the commodities next week to see if the buyers come back in. So for me, soybean and sugar are both interesting markets next week. And also, I think we touched on it on yesterday's video, the price of wheat, while we're on the subject of commodities. So wheat hit a multi-year high this month. That trend off those lows in August has been correcting. So is this going to be another buying opportunity for agricultural commodities? So I think they are interesting markets going into next week. Going slightly off at a tangent there. Someone's saying, when do you close your currency trades? It's a really good question. I must, on this platform, so this, just to explain, I've been trading this account on YouTube since August 2019, and it's 10,000. It's a real account. It's got £10,000 of Capital.com's money, and that's where we started off with. So I do use this account for the videos we do, and I'm perhaps a little bit slow in taking profits on this account because I tend not to bother looking at the positions until we do a video on them again. So if we did do a market and then never look at it again, like Tesla, I mean, that's worked out all right because we last did a Tesla video in September, and I've had the trade running since September, and of course the Tesla price has doubled. But what I do for my own account, and I'm trying to do with this, is I will move the stop loss up. So in effect, I have a manual trailing stop loss. So for example, the trade we just did today on pound against the dollar, where we're a buyer at 136.50 with a stop loss, let's say 100 points away, then the market has to move 100 points in my favour. I'll move the stop loss to break even. If the market moves 5 points higher, the stop gets moved 5. So I hope that makes sense. So I basically trail a stop loss up. So the risk is, of course, or the problem is with a trailing stop loss to take profits, you end up giving back profit, because the market has to reverse quite a bit to take you out of the trade. So that is the disadvantage of a trailing stop loss. And it's a big one, and it's a big psychological one. You can end up giving back a lot of profit. The advantage is it keeps you in trades. I've brought up the Tesla chart here. It keeps you in trades like Tesla or in strong trending markets for a long time. So I don't think there's a perfect way of exiting a position. Personally, I use a trailing stop loss. That's how I do it. And I do have another trade running on Tesla, and at the moment my stop loss is at 775 because Tesla has stopped going up. So I think it's a bit odd that stock markets have still been going up. Tesla has stopped, as you can see. We've got this sort of triangle pattern going on from Tesla. So I've cranked my stop on my open position much tighter now, because I do think if it starts to lose $800, we could see a sharper sell-off. But as a broad rule of thumb, I'll just have a trailing stop loss. So I hope that helps on that one. Can you check US dollar INR? Is that the... I don't know what market that is. Is it Indonesian or Indian? Hang on a second. Do we cover it? We don't cover it, unfortunately. So I can't have a look at that one. Sorry. Oh, Tesla. Someone asked for Tesla. I think, like I said, the trend for Tesla is still up, isn't it? You can't, that trend on Tesla is still up, but that trend line, that March trend line, is a long way away from where the price is now. It's down at 440. The Tesla share price. So what would you do on Tesla? I think an aggressive trade on Tesla, and I wouldn't do it, but an aggressive trade is to be a buyer now at 838, wherever they're trading, with a stop loss perhaps the other side of 800. So if you were worried on missing out on another explosive move in Tesla, let's say you thought it was going to go up another $1,000 again or whatever from here, be a buyer now with a stop the other side of 800 is probably, if I had to do a trade, that would be the trade I would do. I'd much rather that Tesla has a deeper sell-off back towards more the trend line, at least a bit closer than it is now, and have a look at it then. But I think it's really difficult to get into markets like this. Even if we took it back to there, if we took it back to December, would you be in a buyer at $600 in December? I would have struggled to buy in, given the extension from that trend line. I'd be expecting it to sell off and maybe try and buy them at 425, 450. And of course the problem is you'd have missed the boat. So it's a difficult one, I think, up here. But that trend is still up. So for me, any weakness in Tesla, I'd still be a buyer. NASDAQ 100, we did that. Euro, Aussie dollar. Let's take a look at that. Euro, Aussie. Euro, Aussie dollar. There we go. The Aussie dollar is an interesting one. Maybe we'll have a look at that one as well. Because the Aussie dollar has been strong. And what we're seeing here is Australian dollar strength again. We're just seeing euro weakness in this chart, euro Aussie. But of course, if we're seeing the euro weak, then the Aussie dollar is strong. Where are we on historical levels then? So it did trade down to its lowest level, the euro against the Australian dollar, since 2018. So we hit a 3-year low, 2-year low, 2 and a bit year low on the euro against us. I suppose an aggressive trade, it's not what I would do. An aggressive trade would be to buy the euro. If you think it's making like a double bottom at the moment, I'm not a fan of patterns like double bottoms, but if you thought it was making like a double bottom type shape at the moment, you could be a buyer, couldn't you? It's an interesting one to watch next week, euro, Aussie dollar. I would probably rather sit on my hands, see if we get a rally and sell the euro again. That's what I would rather do. But it is quite interesting down here. Which let's have a quick look at the Australian dollar. I've got a few trades on the Australian dollar running. It has been a bit weak, or not as strong, nowhere near as strong over the last couple of weeks or so. I mean, great. Look at the move. The Australian dollar against the US dollar, this is. So, great trend off the March lows, pushed out to fresh recovery highs in early January, and has stalled a bit since then. So clearly, if we see the Australian dollar try to start to break down, that Euro Aussie chart will look very different. But it's quite interesting. I think it could be an interesting year. It will be an interesting year, whatever happens. But if we see a US dollar comeback, all of these charts are all going to start flipping the other way. So I think it's still early days, but it's some interesting stuff going on. So we looked at Tesla, Euro Sterling. Was that a false break of the June lows? That was there's that trade last week. It was a false break, wasn't it, in the end? Because I looked at it this week and it looked like it had broken. It's really interesting, isn't it? I think someone put a comment on our YouTube video this week saying, how do you know whether a breakout is a false breakout? And it was a really good question. And the honest answer is you don't know. And that's exactly what we had yesterday in euro against the pound, which is an argument for doing a trade on its day, actually. But anyway, the market in June last year came down to 88.60, came down to it again in September, came down to it again in November, again late November, again in early Jan this year, and broke this week. But it's so far it looks like a false break. So an aggressive trade on euro sterling here would be to buy it at 89.10 with a stop under yesterday's low. Yesterday's low is 88.30. So let's say you do it with a 100-point stop. So for me, if I was trading that now with a 100-point stop, buy at 89.10. If the market got as high as 9, move the stop to break even and just trail it up and see if the euro runs back up to 92 again. But that's interesting. That's definitely well spotted. That was a false break yesterday on euro sterling. Gold is bouncing, someone's saying. Let's have a quick look at gold. I've just deleted it off my list. That's clever. Gold. Let's bring that one up. It's a little bounce maybe, but it's bouncing and then it stopped bouncing. Very volatile today in gold. Someone's asked, when is crypto back on Capital? The problem is it's not us. Well, clearly we have taken crypto off the platform for some clients, me included. So if I look, because I'm registered in the UK, if I go and search for Bitcoin, I don't have Bitcoin anymore. I can't trade Bitcoin on the platform, and it's due to the FCA regulation. So the regulation's changed. So I think I think it only applies to UK clients. Don't quote me on this. Have a look at the regulation. But it was that rule that came in, was it the first or the second week of January, that the UK regulator said you cannot offer derivatives on cryptocurrencies to, I think, UK clients. So I think if you're French and you trade CFDs on crypto, you still can. If you're in the UK, you definitely still can't. So it's we are following what the regulator has recommended there with crypto. What else have we got? Crude, Tesla. We looked at Tesla, S&P, Ethereum. I can't look at that. What else have we got? I'm just going through the questions, see if I've missed anything. Someone's a good question. There seems to be little difference between any of the American indices. Does one make more sense to trade in cost of trade? It's a really good question. I would say you're right. At the moment, there is very little difference between the American indices. I never bother looking at the Dow. Never look at the Dow Jones. The indices I watch, the Nasdaq and the S&P. So today, if I was trading them today, and I would be looking for a buying opportunity, clearly, because the trend is up in these markets. The Nasdaq would have been the better trade for me because it held above yesterday's lows. The S&P was a little bit messier. Yeah, so the S&P sold off much harder than the Nasdaq. So for me, it's a very fair point to say there's not a lot of difference between the two. I would look at both of them, and I will just trade the one that looks the cleaner market technically, if that makes sense. But I never look at the Dow. And again, of course, the Dow is going to move pretty much the same way. But I think the S&P and the Nasdaq are much better markets to trade. There's the Dow. What did the Dow do? So the Dow has come from 31,280 on the 21st of Jan, which was only yesterday, and has traded down briefly to early Wednesday lows and has bounced. It could be an interesting afternoon in these US markets to see if they can recover from here. But no, I think there's very little to choose between the major US markets, I think, when it comes to trading. What else have we got? Apple. Someone mentioned Apple. Let's take a look. Let's take a look at Apple. I think, are they at all-time highs? Apple. Or near to all-time highs. Let's have a quick look. Let's flip it over to a daily chart. Oh, there it looks. It's interesting, isn't it? Apple. So we had all-time highs in Apple. 138.50, let's say, on the September the 2nd. And then 138.75 on Christmas Eve. It looks like, the 29th, sorry. And we're within a couple of dollars, if that, of these levels now. So it is a break or bust time a bit for Apple up here. So for me, I suppose, again, a trading idea for Apple, we know that it's struggled with 138.48, 138.76. One idea could be to have an order in to buy if it gets to 140. Yeah, if it manages to break out, then we can have an order in to buy the breakout. That's an interesting one, Apple. Let's come back to it next week. And again, the flip side, if you want to go short, you've got the perfect reference point for stop losses because it's been such a problem up here for the Apple share price. Tesla, Aussie dollar. Any update for natural gas? We did look at natural gas, so there is a recording of this available a bit later once we finish this, so we can have a look. How about 10 cent? I've got no idea what 10 cent is. Let's have a look at it. Is it what is it? Investment holdings company provides internet value add service in mainland China, blah, blah, blah. Okay, there we go. So Asian listed trade. Again, if looking at the trends, great breakout. So a great breakout actually earlier this month, wasn't it? So again, for me, I think this is always the problem, isn't it? It's not one I would trade because I never look at this market, but it's always the problem now. Do you just buy it now because it's broken out and it's so strong? So you just buy it at 690, or do you wait? Do you wait and see if we get a pullback? For me, it's positive. We had a false break to the downside and it's roared away, so it's definitely a positive one. But the question is always, do you buy a dip? Do you wait for a dip and maybe miss out? But I'd be positive on that one. Right, I think, how long have we been going for now? What time is it? We've been going for nearly an hour, so we'll think about wrapping it up. Platinum, yes. Let's have a look at platinum. Platinum is another interesting one. It's been a little bit false breakouty as well, platinum. So I think I've said before, I've got a few trades running on platinum because of this trend. This trend since, let's get rid of that. This trend since, let's put an RSI in maybe. It's an interesting market, platinum. Interesting one for next week, I think. Let's make that a 10-day RSI. Oh, God. So I got the Friday afternoon lack of dexterity. Relative strength index, there we go. And make it 10-day. See what it looks like. I'm guessing it's going to be a bit overbought. Oh, it's not that overbought up here. We've had this great trend in platinum. Or a trend in platinum, I should say. Since April is the one I've picked up on. Really good trend. It keeps looking like here, early January, breaks out through the previous highs. And you don't get any follow through. Sells off. Yesterday, breaks out again. Touches 1160 yesterday. So hits yesterday its best levels since 2016, August 2016. And falls back again. So for me, I would still be a buyer of platinum. I'd still be looking for buying opportunities. It just can't seem to pick up any decent momentum on these breaks at the moment. So it's a really interesting market. If we get a deeper sell-off down to 1,000, perhaps it looks a better trade down there. But it's interesting, because it is trading at a 4.5-year high. Platinum. Are we going to see it move a lot further? So let's see. What do you think about cotton? Do you think it'll keep falling? We did a video on cotton yesterday, didn't we? Oh, that was the trade I did yesterday. I'd still be a buyer. I think I bought it yesterday, so I'm slightly underwater at the moment. But to find out more about these commodities and stuff, watch yesterday's video on the channel. But a great trend in cotton since April. Pushed up yesterday to its best levels since 2018 to 2-year plus high yesterday. It's got hit a bit today. Again, I think maybe we'll see a bit more weakness into next week, but I'll be happy to be a buyer on dips in cotton. So we'll see. We'll see what happens. Right, that's an hour done. So what I'm going to do, I'm going to start wrapping things up there. I'll put my contact details in at the end if you have any questions. Don't forget, we've launched spread betting. So if you're in the UK or Ireland, you can open spread betting. Go to Capital.com. It's their platform we've been using today. You can open an account, get up and running really quickly. Go there to find out more about the company and download our app or our trading platform. Or try the trading platform in a browser. You can try a demo account, a real account. If you have any questions, feel free to drop me an email. Obviously, I can't give financial advice, but any questions about trading or anything like that, drop me an email at david.jones@capital.com. I'm always happy to try and help if I can. You can follow me on Twitter, @JonesTheMarkets on Twitter for the odd tweets. I will try and tweet a lot more than I have done recently. And that's it, really. And we'll do the same thing again next week. We'll do it again. We're trying this during January on the Friday to see how popular they are. So if you could like the video and subscribe to our channel, because clearly if we can see lots of interaction, we'll carry on doing them every Friday. We're gonna do another one next week, and then we'll see. We'll take a decision on it, and hopefully, I do enjoy doing them. It's good fun to look at the markets on a Friday afternoon. We'll continue doing this into February. But if you could subscribe and go to Capital.com, it all helps show that they're working. But thanks for coming along. I think we're in for an interesting week next week. I think we're putting an oil video out on Monday, so that will be interesting to look at, considering where oil is. So we'll leave things there. I'll see you again, hopefully, on the live stream next week. And until then, good luck with your trading. Thanks for coming along.